If you're like most people, waiting for the Fed to cut interest rates so that the mortgage interest rate in turns, well, first of all, wrong and wrong. The interest rates already have come down between 1/4 and 0.5%, depending on the mortgage program, starting with August 22nd, when the Fed announced the intent to potentially cut rates at the next Fed meet. So that was thing one. Thing two, there is something bigger brewing in the wings that may completely negate the Fed's rate cut coming up, and that is the hearing that is being fast-tracked to the Supreme Court on the administration's use of the tariffs. Two lower courts have ruled the tariffs illegal. Here's the problem. Treasury Secretary Bissett warns if the court rules against Trump, the government must refund up to $1 trillion in tariff money already collected. But here is even a bigger issue. To pay those massive refunds, the Treasury would have to flood the market with the new bonds. That could spike interest rates despite Fed cuts and trigger mass uncertainty across the financial markets. So what does that mean? It means that the inflation could rear its ugly head again. And depending on that Supreme Court decision, no matter what the Fed does at this point, cutting rates, the interest rates will still go back up. So that goes to say that I want you to be on the fence. Bond investors are already pricing in the risk. The court's decision could reshape America's financial future, especially America's financial present. So waiting for the Fed to cut rates is not necessarily the best decision ever until the court rules.